Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell. It is 6:01 a.m. as I'm starting the video on Wednesday, July 6th. And as always, please run your player at 1.5x. Didn't really see anything notable on futures, just a tick or two red. Pretty much everything is flat. On the macro front, we've got some PMI and ISM numbers this morning. And then in the afternoon, we've got the FOMC minutes at 2 p.m. I think that's something you need to be fairly aware of. And what I usually end up doing is, kind of gauging the day and how it's going. If I've got some, let's just say the market follows up from yesterday, turns green, you're having a good day, you've got a number of positions on that may be in the money. What I usually like to do as the FOMC minutes are about to be announced, like 145, 130, something like that, is just roll. If I've got some winners, just roll them up to even money. That's something you probably want to regularly be doing anyways. And just in case there's some bombshell or market moving information that pulls the rug, you've at least gone to the bank and it won't hurt as bad when they do that. If for some reason the FOMC minutes is something you just don't want to sit through, then just take your positions off and recalibrate after the dust settles. So that's up to you. But I definitely would not be just sitting in, a bunch of short-term longs. Maybe you've got stuff expiring Friday or even next week. If there was a significant rug pull, that would hurt a lot. And I hate to see you, have a loss on something that you had a gain on. At least if you go to the bank, you've captured that bit of the trade. So anyways, let's get into the chart. I got a lot I want to go through this morning. Yesterday, it was hard not to notice the big rug pull in WTI oil. Down here 8%, broke this trend line very decisively. You can see that we're coming into a really key level here where both the 200 and technical support coincide at 95, let's call it. So and I do expect, even if there's some consolidation here, I do expect after this break that price will continue to come in to this 95 level for at least a touch. And I was going back over the chart. This is not one that I usually look at every day, but just in hindsight, I think it's important to note the double top with bearish divergence. You can see up here at 125, there was a high. I don't know if we got exactly to 125. I remember 123.50, but at much lower momentum and lower RSI. So that's the inverse of the double bottom with bullish divergence, right? This is the double top with bearish divergence. So in your chart work, when you see a stock coming up to a prior high, it's always good to have that double top scenario in your mind if it can't break through, and especially if you see big negative divergences. If you had been on a run down here as it walked up the 8-day, one thing you can always do, especially if you're sitting on fat profits, is take your profits at the prior high, right? Where that resistance line comes in. And then you can either, one, take an objective short against the prior high and see if it works, or wait and see if it breaks through. And then if it breaks through, you can have some degree of comfort on that breakout. You have a very clear line to shoot against at the prior high with a stop just below, and then see if it, goes on its merry way. So when you see these important junctures in the chart, get your mind working on potential scenarios. And if you see, price coming in to a prior high with big negative divergences in place, that should at least bring up a yellow caution flag in your charting. Moving on to SPY, you can see here we opened low and they immediately started buying that up. Right now, we recaptured the 8-day, which is on the face of it somewhat bullish, still below the 20-day, which comes in at 384.80. And you can see that we've got some technical resistance there as well at 385. So today, even though you may be on a short time frame, be aware where that 20 comes in on your chart. So looking over at the 60-minute, you can see that 385 comes in right about where this downtrend line comes in. And then you've got a little overhead level here at 387. Why? Support, 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 support. Large volume over price bars here that may pose some resistance on the upward path. But if price can break above this 60-minute downtrend line, and you're not in it, depending on where we open, all that kind of stuff, I think it's worth it to be long and see if you don't get the breakout above this 387 line, which would open up quite a bit of upside for you, having already established a position. Just know your levels as always. Yesterday was just one of those days where everything worked. It was, for a change, it was really nice to have that kind of day. I hope you participated in it. And what I'm going to do as I go forward is kind of deconstruct what you could have done and what you should have been thinking as the day kind of unfolded. So here we had the big gap down in the morning, on the open, and look where we stopped, right at big time support. We had support here, all along here, etc. We had the top of the gap. It never even really got to that. So when we started going back up, if you didn't catch the low, that's fine. Your first chance is, and I don't have it marked here because it filled, but you had your opening gap from the close on Friday to wherever it, opened at. So you had to move into the gap, which was a signal to get long. You had a recapture of 377.50. That was a buy. You had a large, really the largest, one of the most largest volume over price bars on the chart. So taking that out was a technical bullish sign. And then right at the end of the day, it went red to green, not by a lot, 0.2%. But all in all, on the day, you had the gap, the 377.50 level where you could have bought. And the nice thing about yesterday is once it got going, there really wasn't any looking back on the day. No big, shakeout candles, stuff like that. So once you got in your position, it was just a matter of sitting there and deciding, whether you wanted to roll up and stay long or whatever the case may be. Now, moving on to the Qs, same kind of idea here on the daily chart. We opened and we stopped right at the top of this gap. We recovered the 8-day, and now we are sitting right at the 20-day, which is at 387.62, and this large volume over price bar here on the daily chart. So, and you can see where this descending trend line of this wedge, we're right there. And since this is a daily chart, it's going to be really, really important to see if, number one, can price move above the daily 20 EMA and then break out here above 290, and then that should be able to spark a bigger rally, having taken out the daily downtrend line. And then we can look above for targets. We've got 299 here. We've got the 50 coming in. We've got 305, which was a level where all this consolidating took place between 305 and 310, 311, something like that. So I think today is going to be an important day to see if we can get follow through from yesterday and break above the daily downtrend line. And you can see here, in terms of short-term trading, if you're an active trader, at your desk all day, watching ticks, we opened right down at the top of this gap. Then we moved into the opening gap. That was your first buy. You had a second chance to buy at roughly 282, and then at 284, and just was a unidirectional day. And you can see here that we've got the 60-minute downtrend line right above price, and that roughly coincides with the daily downtrend line that I just showed you. And so if we can break above this level and then take out, I'm just going to call it 292 at this high volume over price bar, then it looks to me like we would have an open run at this gap that has yet to be filled. IWM, a lot like SPY in the sense that we opened low, found support at these lows, came up back through 170, took out the 8-day, yet still a little bit below the 20, which comes in at 173.70. And then we've got a little layer of technical resistance here at around 175. Let's drill down on the 60-minute chart. Yeah, you can see it here. We've got a 60-minute downtrend line coming in at 174. You break that, you can come up to this high volume over price bar at 176.50, and then we've got a prior high back up at 178.25-ish. So you got some nice levels here. I think the most important thing is breaking above the downtrend line. That should give it some breathing room, and I would expect that it would, at least if we broke out here, I think we would at least come up to test this high. Now, yesterday, we opened low, came right down to our pre-identified levels, stopped on a dime, reversed. And so, even if you didn't catch this low at 167, this point here at around, I'm just going to round it off to 169. It was a little less than that. But you moved into the morning gap, and so that would be a buy there, and then it just never looked back and just kept on working higher the rest of the day. So definitely some areas where you could have gotten in at objective levels. Moving on to Meta. I mean, this was a great trade. Of course, it's always a great trade if you're in it and it works. It doesn't, as you know, it doesn't always work out that way. You can do everything right as a trader. Follow your buying cues and all that stuff, and then the stock just doesn't do what you want it to do or expect it to do, and then that's trading. But in this case, everything did work. We opened low, right? We came down. First thing that happened was it recaptured the bottom of the old gap here at 158.75. The next thing that happened is we broke the prior high of Friday. Next thing that happened was we broke the downtrend line of this wedge. Another chance to buy. A lot of guys in the trading room, including myself, bought at 162 on that breakout, and then we were able to take out this prior high at 165, and it kept on going. So today, I think the key pivot area is 170, which was prior resistance at these prior highs. It was resistance back here, and you can see that this is the top of this value range, and then there's a void in the chart until we get up to the 177 area. So if you're not in it, keep your eye peeled on 170, because I think if you break above that, a couple things. There's a gap to fill, and you're in a volume over price void. So I would expect, at a minimum, come up to the bottom of the gap. If there's power behind the move, it'll just keep going. But even if there's a hesitation, as long as you hold 170, you should be fine. I would be, if I bought 170, I would have a stop just below that in case this thing comes up, gets rejected at the bottom of the gap and then just falls apart. So a nice goal for today would just be to have an alarm at 170 and be ready to take it long once you get that breakout, and then fingers crossed for a gap fill and a move up to this technical resistance level at 176. Now, if you were to get a breakout there, then my expectation would be to come up to 184-ish. I doubt that's going to happen today, but you never know. But I always like to keep those upside levels in mind as things progress, if in fact that they do. So I think 170 is your key level. Apple. Nice day, up almost 2%. We opened low, stopped on this 137 that we had pre-identified, held, came up, and then broke above this 139, which took out this support area, this resistance area, and then moved right on up and actually broke out of the 60-minute downtrend line. Now, as you can see, it's got some open running room. The next big level is 142.50. You can see this prior high here. You break above that, you've got a relative void in the charts, and I would say that there would be an open path to the 145 area. So if you're not in it and you're willing to take a little bit of heat, you can get it in this area, and then you can use a stop just below the downtrend line or a little bit below your entry point if you want to try and get in. And really the best scenario would be a little bit of a weak open that brings price back into 140 but holds. I would buy that and then see if it doesn't reaccelerate after that. But definitely a few places to buy along the way. Same thing with Tesla. We opened down. Look where we stopped at 650. Bottom of the gap, filled that gap. You can see that this gap ran from 673 down to 650. We came right down to that level, filled that gap, technical check mark. Next candle, right back up. Even if you didn't buy it here, you could have bought the reclaim of 665. You could have bought the breakout from the top of the gap at 673, and it just kept on going. So a couple nice entries there. 700 is your clear pivot. You break above 700, I think you're shooting for 720, then 735. And remember, we still got an open gap up here that has yet to be filled. Microsoft. The pattern of the day was really the same across the board in the stocks that we focus on. Open low, your first buy point was a recapture of 256.50. Then at 259, then it was gone. So today, I think your pivot is 263.50. You get above that, I would expect a move towards 266.50, and then the prior high up at 268. So yesterday provided some nice objective buying opportunities in Microsoft, and just like the other stocks that we've looked at thus far, it was all green candles. There was nothing there to scare you out or to give you any reason not to just sit in your position and stay long. Amazon was another, what I call an easy trade. It opened low, undercut 107, then they started buying it up. If you were Johnny on the spot, recapture of 107 was definitely a buy. I think the real buy, they're all real buys depending how quick you are, how good you are. But if you didn't catch this move, we had already identified 110 as a key level, primarily because that's where the high volume over price resistance came into play. And then once price took out 110, then that was good for basically $4. So now I've got the pivot at 112.50. If we open low or down a little bit, if you could get an entry in the 112.50 area, I would buy that with a stop below and see if it can make progress up to 115, then 117. And above 117, you can see that it's got quite a bit of running room if it wants to do that. Google stopped on this downtrend line. You had a good opportunity to buy the reclaim of this 2175 area, and then right on up 2200 filled this gap, kept on going. Anywhere along the way at these technical levels and gap entries, you could have bought Google. Today, I think it needs to clear 2280 for 2330. I would not want to see price come back. It can come back a little bit, 2250-ish. If you got a chance to buy there, I would think that would be worth a try, or a pullback to the top of the gap. That could certainly be a potential. I haven't made mention of it yet, but I will now. You've got bull crosses on PPO and breaks above 50 on RSI. I think if you look back across, Microsoft and Apple and Meta, you would see the same exact thing. Netflix. If you're on top of this, again, there were several places to buy. It opened low, really opened into no man's land. Really wasn't an objective place in my mind to buy at 174, but definitely on the recapture of 178, that was a buy, and then the recapture of 182 was a buy. And if you had bought at any of those locations, you would have been pretty pleased with that. Now we're at an important spot, the intersection of the downtrend line and the bottom of the gap at 196. above 196, whenever you leave a trading range, then recapture it. The target is the far side of the range, which is at 193. So if you break 186 to the high side, I think you can buy that and then shoot for 190, then 193. SMH. I was short from Friday. We had been short from up here on Thursday. At least some of us were. We got the bad report from Micron. We sold down. Some of you may have held your position. Some of you may have rolled out of it. Then we got the gap move down here. We had talked about yesterday of rolling out of that position and staying short. But as the day, so you harvested that amount there. It doesn't look like a lot, but it was about $5, which, you know, on a short-term, short expiration put, it paid pretty well. And so what I did was roll down like we talked about, but then it became clear that there was a rally, not very much of a rally, but when you're sitting there with a put and things are going up, you're just seeing that thing decay. So that's when I sent out a note just to close it. If we're going to have a little rally, even if SMH doesn't really participate fully, it'll probably go up. I think a good place to look for an objective reshort is if this gap fills and we get a price move into 202, 203. You've got a high volume over price bar right here and a lot of resistance. I think that would be your place to try a short. The next place to try a short would be at this downtrend line. So we'll have to just kind of watch that. Yesterday you may have noticed that it was a junk rally. What do I mean by that? All the stuff that's been destroyed. You know, your Zooms and your, God, I can't even think of all these bubble names. DocuSign, Roku, you know the list, the Kathy list. And that's why I like these funds as trading vehicles. Instead of trying to trade individual names that fit into these nice, neat categories, you can trade the basket and do, you know, pretty darn well just by having those. So yesterday on ARKF, we opened low, stopped right at support, which would have been an objective place to try along if you were really focused on it. But even if you weren't, you had a recapture of 1575, and then it never looked back. So today, I think you've got a pivot here at 1685-ish, right in that level, right in that area. You've got a higher volume over price bar here. So you take that out, I think you can get a run to 1750, 1785 at these prior highs. And I mean, that in and of itself is a nice day. And you can see the outperformance up 6%. ARKG, the genomics, hadn't been focused on that in the last week or so, but now I think it's time to pay attention. Why? This is the daily chart. We had a recapture of the 8, the 20, and the 50. You can see this strong candle up 8% yesterday, but now we're at an important point. Why? Because we've got the daily downtrend line coming in, and we're in a relative volume over price void. So I think if you get the breakout on the daily, I think you can get long and then see if you can take out 137.50. And I think if you do that, then you got a $5 run up to 42.50. So the ARK Genomic is really setting up well on the daily chart. The big test will be the downtrend line. ARKK, this was a gravy train. We opened low, came back to touch the top of the gap. Even if you didn't get it here, getting it at 41.50 on the reclaim of this level turned out to be a great trade. Then it just kept on going. Took out this 43.50. So now your pivot for this morning is at 45.50 at these prior highs. If you can take that out, then I think you got an open path to 47 at this prior high back here. ARKW, same kind of thing. Probably a harder trade if you were not really focused on it. It didn't really move a lot on the downside, but then you got this big candle. If you didn't buy it at 50, the next objective level would have been 52.50. Still a nice trade. I mean, $1.50 in a couple hours ain't all bad. But today, the pivot point is 54. I think if you take that out, you got to run to 56 and potentially 57 if the stars align. We're in XBI. This is the daily chart. We price has recaptured the 8-day, the 50, and the 20. We broke above this 77.50 area, took out the daily downtrend line, and that's really the most important part of this chart, because now we've opened up a whole nother range. You can see that we've got a prior low right here at 81, maybe a little higher than that. Yeah, we closed right on 81. So your pivot's 81. You take that out, you can move up towards 85, which is the measured move target of this double bottom with bullish divergence. And then above that, we've got 87.50 and the declining 200 EMA. So very technically significant day yesterday, breaking above the daily downtrend line. And you can see how long it's been since price has been above it. So that was significant. Same thing with IBB, the large cap biotech ETF. We took out the daily downtrend line. So now, at least from a technical standpoint, we could see a run up to the 200 or possibly even 132.50 at the top range of this value band that runs from 120 to 132.50. So I'm still long that, hoping for the best. If you're not in it and you want to be in it and we get some kind of pullback into 120 that holds, I think that's your second bite at the apple. So that's all I got for this morning. I hope you did well yesterday. If not, take some notes. Look at your buying cues and get dialed into that. Now, I do want to say that, and I think I may have already said it, you don't know, when you make a technical buy that you recapture a level. I'm sure you understand that, number one, you don't know at that point if it's just going to keep going and never look back, or have it be a failed move. All you can do is be attuned to your technical buys, make the buy, set your stop, and hope for the best, right? There's nothing that says this technical breakout is going to proceed to where I think or hope it's going to go, to the 200 or to 132. If the FOMC notes come out at 2 o'clock or even before, and there's a giant red candle that brings it down below 120 and the downtrend line, that would tell me it failed. It was a failed breakout. We came up, then we took a look above and it failed, and we moved back down below. There's nothing you can do about that except respect your stop. Probably say a few cuss words, whatever you do when a thing fails. But if you're second guessing every buy, then you'll never guess right at the ones that'll work and the ones that won't work. All you can do is, in your experience, take the buy signals that you feel best about and set your stop, and then see what happens. So I'll leave you with that. Hope you have a good day of trading today. This has been Chris Buss with Traders Profit Compass. I will talk to you next time.